Morning, guys. It's Tuesday, September 30th, 5:23 a.m. Central Time. Grain markets a little bit lower this morning. December corn futures down 1.5 at 420. November soybeans down 3.5 at 1007. December Chicago wheat down a quarter cent at 519 and a quarter. December Kansas City wheat down a quarter cent at 508. December spring wheat down 1.25 at 568. We've got some more trade news to start off this morning.
USDA official Luke Lindberg is in Taiwan this week, meeting with officials for trade negotiations. Lindberg's agenda includes participating in USDA's Agribusiness Trade Mission and leading a roundtable with U.S. agricultural representatives. Taiwanese exports to the U.S. currently face a 20% tariff. Taiwan is the 8th largest market for U.S. agricultural exports, while the U.S. is Taiwan's top supplier for agricultural products. Last week, Taiwan committed to purchasing nearly $6.4 billion in U.S. corn and soybeans over the next 4 years and $10 billion in total U.S. ag purchases.
Luke Lindberg is the Undersecretary of Agriculture for Trade and Foreign Agricultural Affairs. I'd never heard that name before, but apparently he's going to Taiwan to visit with their leadership and talk trade. So what has happened with the U.S. and Taiwan to this point is this. The U.S. imposed these reciprocal tariffs back in April, and Taiwan responded without any sort of trade deal. And they said, hey, we're going to buy a bunch of U.S. ag goods. And they did it kind of as like a good faith, let's ease the tension type thing. Brooke Rollins on X mentioned this about a week and a half ago. Taiwan just committed to $10 billion in U.S. agricultural buys over the next 4 years, including soybeans, corn, wheat, and beef. That's a game changer for our farmers and ranchers. America's producers are back on offense and leading the world again. That sounds all well and good until you take 3 seconds to do a Google search and find out that Taiwan buys already annually $3.8 billion worth of U.S. ag goods, which means that over 4 years, if my math is correct, that would be $15.2 billion over 4 years. So Taiwan is basically committing to like, hey, we're just going to keep buying what we've already been buying and no more than that. So it's not really a win in any way, shape, or form in terms of trade. Now, with these trade deals, like you go back to the biggest one of my lifetime, which was the phase one trade deal following the last Trump trade war. We've, of course, been through all this before in 2018, 2019, and 2020. The trade deal, the phase one trade deal with China was signed in January of 2020. And it wasn't until 6 or 7 months later that China came in and really started to buy U.S. corn and soybeans aggressively. And they did buy U.S. corn and soybeans very aggressively following that phase one trade deal. Did they hit the trade deal targets? No, they didn't quite, but they got fairly close-ish depending on which data you want to look at. So I think with all of this stuff, whether it's China or Taiwan or any of these deals that you see, like the deals are just talk until you see the actual business done. You need to see flash sales. You need to see the business show up in the export sales report. And until it does, the market isn't going to care about any of this. I think that's kind of where we're sitting right now.
USDA will release its quarterly grain stocks report here this morning. September 1st stocks of corn are expected to be 24% lower versus the same period last year. Soybean stocks are estimated to have declined 5.6%, while wheat stocks likely climbed 2.6%. There is some variation between the pre-report estimates and the USDA's most recent estimate of the old crop corn and wheat carryouts.
Premium subs, I'll have a USDA snapshot video out, hopefully within 10 minutes of the release. It depends on if USDA is on time or not, and they have a history of not being on time with these reports. I think people are prepared for a bearish surprise in the corn stocks. At least some traders are. There just seems to be some anecdotal evidence out there that there's way more old crop corn than we had thought. And people are thinking that this old crop carryout, it ain't a 1.3. Maybe it's a 1.4.5 or even a 1.5. Where do those extra bushels come from? Maybe it's on top of last year's crop. Maybe the 2024 crop was bigger than USDA had estimated. Maybe feed and residual use wasn't there. I don't know, but I think that's going to be the first thing that people look at here today. So that report will be the big news item today. It'll be out at 11 a.m. Central Time.
U.S. corn conditions remain strong. As of Sunday, 66% of the corn crop was rated good to excellent nationally, steady with the prior week and above the 5-year average of 58%. The rating was the highest for the week since 2018. USDA estimates that 18% of the crop is harvested nationally versus 11% last week and 19% on average. Soybean conditions improved last week with 62% of the crop rated good to excellent, up from 61% the previous week and above the 5-year average of 59%. USDA estimates that 19% of the crop is harvested nationally, compared to 9% last week and 20% on average.
Okay, the trade at this point, it's almost October. The trade doesn't care about crop conditions anymore. They're more interested in yield reports. Anecdotally, what I've heard, and I'm hearing a lot of stuff, the corn yields, early stuff is they're not as good as what people had thought or would have thought maybe back in August or back in July, rather, before August hit and it got hot and dry. I think that there was absolutely some yield trim there. Soybean yield surprisingly good despite some dry conditions in half the Corn Belt during the month of August. Looking at harvest progress, corn was only 18% complete and the trade was looking for 20. If you go and you look at the Western Corn Belt, that's where it's slow. Like Minnesota's 5% done versus 9 on average. North Dakota, they have it at 0 versus 5 on average. South Dakota, 5 versus 11 on average. Nebraska, 11 on average versus 17. Kansas is slow as well. So that's where you're seeing things slow down. You're ahead of schedule in some of your Central and Eastern Corn Belt states, and that's because weather has been pretty dry. Like you've got this kind of southernish stretch of the Corn Belt that has seen some rain over the last week, but a lot of the heart of the Corn Belt has been pretty dry. Over the last 14 days, this is a good map from our friends at Crop Profit. This is precipitation as a percent of normal, much drier than normal in call it half or more than half of Illinois, a lot of Indiana, Western Ohio, parts of Iowa, parts of southern Minnesota. So I think that harvest is going to move fairly quickly from here. There's not really much rain in the forecast for the next 7 days. I think a lot that could happen. A lot is going to happen here in the next week to 10 days in terms of harvest progress. One thing that will come with the dry weather is reduced levels on the Mississippi River and its tributaries. And that at some point could become restrictive with regard to grain movement. If it becomes more expensive to ship grain down the river, then it's going to impact bases negatively, and it would not be a good thing. We've got a whole lot of export obstacles as it is, and the last thing we need is another one.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Phantom yield loss is a controversial topic. Ben Blair from Max Ag in Iowa was on with me yesterday, and he's probably done more research on this than anybody. We made a free tool available that will help you to figure out exactly what sort of harvest practices you need to be involved in as it relates to phantom yield loss. Do you need to let corn dry in the field? Do you need to pay for drying? Should you deliver wet corn? These are things that I don't understand, but Ben understands very, very well. Again, we made an Excel spreadsheet or free tool available. You can go punch your own numbers in and see what makes sense. It's absolutely fantastic stuff. This is stuff that provides direct ROI. You can punch your numbers in, and it could be a game changer to the tune of, several cents per bushel, which is a big deal these days. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We don't want to do your brokerage. We don't want to sell your crop insurance. We don't want to even talk to you, really. We just want to send you our emails and our text messages. We do reply, or I reply to questions that come in via text and email and stuff. But check that deal out this morning, guys.
U.S. corn shipments were near the upper end of pre-report expectations last week. USDA reported that 60 million bushels of corn were inspected for export during the week ending September 25th. The print was up 10% compared to the previous week and up 33% versus the same week last year. Soybean shipments were reported at 22 million bushels. The print was up 5% compared to the prior week, but down 13% versus the same week last year. Wheat shipments were near the upper end of expectations at 27 million bushels. The print was down 21% versus the previous week, but up 34% compared to the same week last year.
Let's take this opportunity to talk about soybean shipments, which are, okay-ish. Here's the problem. We are entering prime time U.S. soybean shipping season. This is a seasonal chart of U.S. soybean shipments. And you're not supposed to be able to read every line here. Just look at the trend. The trend is that you see a big spike up in soybean shipments immediately, like call it post-harvest or even during harvest in October. And the strong shipments persist through November, December, maybe into January, February, depending on the year. The rest of the year, like February through August, is largely Brazil's export window. And that's why we don't ship nearly as much during that window. The problem, of course, is that the U.S. Book of export sales for the current marketing year is the worst of the last 10 years, and we can't ship what we haven't sold. So you've got to be prepared for a drastically reduced soybean shipping program here during the next couple of months, barring some sort of trade deal or some sort of scenario in which China or somebody else comes in and buys a ton of soybeans. We just don't have the sales on the books. And this is going to be a problem. I think the trade trade and traders, they've already very much tempered their expectations with regard to U.S. soybean exports. They know that USDA is overstating exports at this point in time, and that they're probably going to have to come down. And that's part of the reason that the market has been sluggish.
Increased demand has pushed Russian wheat export prices higher for a second consecutive week. Exports have been sluggish to start off this season, running 29% below last year's pace for July through September. Last week, Sovicon made its first downward revision to this season's export forecast, trimming its outlook by about 1% to 43.4 million metric tons. Russia's wheat harvest is nearly complete with 87 million metric tons harvested. Consulting firm ICAR estimates this season's crop at 87.5 million metric tons.
I guess I'll call this good news. Although we see every other week, it's either Russian export prices were down slightly or, sometimes they're up slightly. The trend has been mostly lower. It's good to see better global demand, even if it's not for U.S. wheat. U.S. wheat demand for U.S. wheat's been good. That book of export sales is the first or second best of the last 10 years. I mean, we're doing fine. We're just still burdened by oversupply. I can't help but wonder if some of the rising geopolitical or war tensions, whatever you want to call it, between Russia and Ukraine could at some point that be friendly to the wheat market again. I know that the traders who bought wheat on those headlines, a few years ago got burnt pretty bad because wheat fell off a cliff following that initial spike. But it could happen again. Never say never.
We had a couple of flash sales yesterday. U.S. exporters sold 5 million bushels of corn to Mexico and 4 million bushels of corn to unknown destinations for delivery during the current marketing year.
Yep, corn demand's great. Brazil has become slightly more competitive versus the U.S., although my understanding is that the U.S. is still probably the cheapest corn on the global market right now. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 15 cents to 47 cents lower. Feeders saw losses ranging from 30 cents down to $1.77. Box beef prices were also lower. Choice was down 75 cents at $370.68, and Select was down 355 at $348.89.
Dow Jones is down 140. The S&P is down 16. Treasuries are up just a little bit. U.S. dollar is off just marginally. Crude oil is down 39 cents in the November WTI at 63.06 last trade. Have a great day, guys. We'll be back on Wednesday. Remember, report at 11 today.